Hello traders at CMC Markets. Welcome to another update from me, Trevor Neil, analyst at RRG Research. This is being prepared on the morning of the 5th of April. We're going to start by looking at the relative rotation graphs of the major indices. There are some notable things going on there. The currencies we'll look at briefly. They're generally ranging and not offering the best opportunities like they normally do. And we'll look at gold and we'll look at crude oil. Now, we've got some quite interesting features here in this relative rotation graph of major world indices. Don't forget, what we're looking for is arrows which are heading in a northeasterly direction, and we're avoiding, if you like, on a relative basis. This is versus the MSCI World indices which are moving in a southwesterly direction. So what have we got? If we look at the US indices, what is leading furthest on the right is furthest on the right in all the indices is the FANG stocks, but it's heading in a southwesterly direction. We've got quite a lot of weakness in that group now. That is shown particularly in the Nasdaq when we broaden it out, and that's in the weakening quadrant and heading in a southwesterly direction. The S&P, as you would expect, being a big constituent of the MSCI World, is very close to the center here, but not looking in a great direction. And here's, I should mention, the Dow Jones has actually moved down into the lagging quadrant and heading in a southwesterly direction. So westerly, weakening on a relative basis to the MSCI World, and with lower positive momentum. So it's heading lower on a relative basis. Now, what is looking? Let's look at Europe next. The stocks, nice move here, straight through, quickly through from the lagging quadrant into the leading quadrant, and heading in a northeasterly direction is the stocks index. The CAC also in a good direction, the DAX also in a good direction. The FTSE is lifting up, but it's way over on the left-hand side here. It's weak, and it's a really reluctant participant in the global stock indices. So Europe is looking good, and then also my eye is drawn to over here the bête noirs of recent times, the Hang Seng and the Shanghai Composite, both coming around rather strongly with strong tails here, long tails into the improving quadrant, and I want to really keep my eye on those because we've had long downtrends in those. Of course, it doesn't have to be over necessarily just because it's strengthening a bit on a relative basis, but let's have a look at those charts. So here are the magnificent 7 stocks, and hunting for anything which is heading northeasterly. We've just got this Amazon one here, but it's very close to the benchmark. So nothing very inspiring. The great alpha is generated away from the benchmark, which is the S&P, but Microsoft slipping down into the weakening quadrant, having done so well. Google coming down round here, and Nvidia falling away quite sharply in the weakening quadrant and heading southwesterly in this direction towards the lagging quadrant. Apple, which looked good, beginning to abort. The Tesla, it's up and down a little bit, but generally down. So let's have a look at a couple of these. Now, we saw that weakening behavior on Google. This is a daily chart, but I wanted to bring back 21 in here for the big tops that we had in place up here around 151. We approached it again at the beginning of this year, approached it again this year, and it's struggling. It's really quite struggling. The pattern is, of course, rising lows and rising highs, so we are approaching it and probably are going to break it quite soon, but in the short term, it's struggling. So that previous recent high in the end of January was at 150. We got up to 156 and then sold off hard here, I think, in anticipation of the labour data. The MACD is still strongly up and positive, a little bit of a narrowing of the gap there, but I don't think that's necessarily indicates it's going to cross necessarily. However, we have got a strong sell signal from the RSI. It's come down through 65 from above, a steep angle there. That's a strong sell signal, which tells us that this breakup, which may come later, is likely to be postponed. It has got some support pretty close to here at 149. It's got the gap to be filled at 143, and the level that must hold is 130 to keep the rising lows pattern intact. So a very dodgy time for this, looking like it's going to struggle to make this big break, this multi-year break, and the struggle is just beginning, I think, but may well come later. Now this is Nvidia, and it's also struggling with a high. We got up as high as 974, then another attempt at 967, and then we've come off hard, and actually we're threatening important support here at 840, and that may well give way, and we may have a more serious reaction in place. This is in the context of a rising lows pattern, but you will see here that the MACD has turned down, and the gap is widening. The bearishness is intensifying, and on the RSI it's really plummeted, and so I think we're going to have serious trouble with breaking it high, and I think what is very likely is that we're going to break these lows here around 845 and that high there too, and make a serious pullback in here, maybe 38.2. That would only take us to just below 700, even if it was only 38.2% of the move. Watch out here. We see it on the RRG chart. Things which are on the right are not really moving in the right direction on the chart. Now, over on the left-hand side and looking poor is Apple. It's one of the ones that is really putting a drag on the Magnificent Seven or the FANG Plus group, and look at the danger it's in. So we're trading down here close to this low that we established back in March, but more importantly this low here from October 2023 at 165.67, and we're only just above that now. We're in a pattern of lower highs and lower lows. The MACD is close to crossing downwards, and I'll zoom in a bit, but bear in mind the significance of this, and the next support really comes in at 150, so there could be $10 on the downside on this. If this breaks and it's close to the break point, it's got a little bit of downside momentum we see on the MACD, and looking at the RSI, you can see that's weakening too, moving down as well. Not sharply down, it's not very strong momentum. It's approaching very, let's say, gingerly a crucial point, but the momentum is down, the pattern of lower highs is down. We could be very close to a significant breakdown in Apple, and this whole group is really breaking up now into ones which are going strongly, but even they are struggling to make new highs, small double tops in place and things like that potentially for them, and some of them have really separated and broken down hard. As a group, it's no longer all strong at all. Moving to the currencies now, we can see that every currency is left of the 100 US dollar benchmark, and so the dollar is stronger than the currencies, but the direction of all of the currencies is generally north or northeasterly, improving in its performance. So all of them in the same direction, and here are the currencies weaker than the dollar but improving. So that is what is going on in the big picture background. So here we see the dollar strength, and then currently the currency, the euro in this case, strengthening against the US dollar. And we see it here in the MACD, it's coming up, it's formed a little base here, but we've got three bases really very close together around the 107 level. We're bouncing from that, but it's very range bound, this currency, and around 109.80 is the top end of the range. It does look as though it's ready to steady through that range, but really hasn't got a lot of momentum, and I think it's just edging higher. Talk about ranging. Here is sterling cable, it's ranging, and it's very defined range, isn't it? Really, the top end is 128.60, the bottom end, these series 1, 2, 3, 4, 5 lows, all at 125.39. So we're churning around in that range. Currently, we're just pushing off the bottom of it. We saw it hooking around on the RRG chart. The MACD gap is narrowing, it's improving. The RSI is improving, but it's not very strong, and it's in the middle of a trading range. Again, for any sort of breakout or trend following trading, it's not the right condition. It's good for day trading and mean reverting type trading. Where we may see some excitement very soon is in the dollar yen, the strength of the dollar. It's finding a struggle at the very important 152 level, and here we see it's flattened out there at it. It's respecting the resistance level, and we've seen that the MACD is coming in towards crossing down, really just more reflecting the flatness than bearishness in the market. I don't think it is really actually bearish, the dollar. Dollar has come down through 65 from above, so that does indicate that in the short term we may ease back, but we're in the context of falling yen and rising dollar. But it's a very significant level, and it does not look as though it's ready to break up, the dollar to break up anytime soon. Just a reminder of how important this level is. We've got the high here, November 23, this high here, 1st of November actually, 23, and then this here, high from 2022 in October. So that's what's at play here, and it's really struggling to make that break. It is a significant level and will be a significant change for the yen. It's already been weakening substantially against the dollar, but this will be a whole new era if we can break that 152 level properly. But at the moment, it doesn't look as though it's ready to do it. Now moving to gold. Gold is continuing to power ahead strongly. The gap is widening on the MACD. We're increasing in momentum. Actually, yesterday's candle I take as a bullish candle. We came down. There was about a profit taking. Then we finished steady. But I think most likely this is just an easing. A correction, a profit-taking correction, and a high of 2-3. It will be taken out. The RSI is looking pretty steady, just a little correction to reflect that candle. But maybe taking the message that this rejection with lower shadows, that this is. Now I want to end looking at Brent crude oil. I've got a lot of data in here going right back to 1990, but I want to highlight this area here as we move up now quite strongly. I want to look at this area here. Beginning, I would say, to 97, extending up to 125 or so, was a period of from April 2011 to the big breakdown, which you'll remember, the Saudi Arabian breakdown in 2014. Multi-year consolidation there, trading in relatively narrow range, and we're approaching it again. Although we're moving up very strongly, beware, there is strong resistance close above. Now we've liked Brent crude oil. This is Brent crude oil. Since it broke through this 84 area here, this ascending triangle here, we expected big things from it. Had a big breakout, had a pull in it, then another breakout here, moving up towards the resistance from October 2023 and 93, and then ultimately up here, the September high of 97. But bear in mind what we're coming up into, that 2011-2014 area. But this move has really got a lot of momentum behind it, powering ahead here. The gap between the MACD and its signal line is widening. It's increasing momentum. RSI is powering ahead. But there we are. That is its shot, and it's nearer the end than the beginning of its move. I thank you all very much indeed, everybody. I hope you find this session beneficial. This has been Trevor Neil, analyst at RRG Research, and wishing you all the very, very best, and above all, may the trend be with you. Goodbye.